Hey, welcome everyone. It's Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you please type the number 1 in the chat box, let me know that you can. I would greatly appreciate it. Thank you. Morning, Helen. All right. Thank you, thank you, thank you. Thanks, Andrew. I appreciate that. Loud and clear. All right. As we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure that it fits your own personal risk profile and risk tolerance. All right, so here's our agenda for today. We're going to go through our follow us page. We're going to go into today's trade. So get your trades ready. That anything that you've done today, the last couple of days, good, bad, or indifferent, win, lose, draw, doesn't matter. Funded, non-funded, doesn't matter, because we consider everything non-funded. It's all for educational purposes. We'll look at economic reports. We'll review the market. We'll look at upcoming training, weekly training topic, and then your stocks in review. So that'd be the candidates you want me to take a look at. So here's our follow us page, folks. Make sure that you're checking these out. We put content out almost every single day on the various platforms. You do not want to miss out on it. There's such great usable content of what you can apply right now to your own trading. So check it out. Today's trades. All right. What trades did you do? Drop them in. I don't care, again, if they're funded or non-funded, doesn't make a difference. It's not going to be, oh my God, you did that? You actually took that trade? What made you? That's not what this is. This is all about an accountability feature or factor of I'm putting it out to the world that here I am, I'm doing it, I'm trading, and we're getting it done. Jennifer typed in Friday made $600 on Netflix and Thursday $1,000 on Netflix. Great job, Jennifer. Wow. Really, really nice. Let's see. Alex said, still scalping up a storm as you recommended last week. I've been profitable $500 to $1,000 every day since last week's Power Hour and trading you. Thank you. Yeah, so you're quite welcome, Alex. Guys, Alex is a story to be told. You know, a couple of months back, he'd not been doing any trading. He came into our Fibonacci training live that we did, which we just completed. It is available as a downloadable or a annual lifetime access to that training series. It's about 20 hours long. And he started in there. He's in our Trading You, which is our mini mastermind. And he's been going through the process, showing up at Power Hour every week, asking the questions. He came into last week. We did the very last training we did in Fibonacci Trading Mastery, which is our Fib series, which was a follow-up. And he had tons of questions when he walked in, which was great, right? And now you see what he's talking about here. Still scalping up a storm, as you recommended last week. Been profitable 500 to 1,000 every day since last week's Power Hour and Trading You. Thanks. So you want to be involved. You want to get doing this stuff. You want to be asking the questions. You want to be around the individuals like myself and Brandon and Amelia and Tony and the likes to be able to ask those questions and have that input, that feedback from us of what you might want to be able to do maybe a little differently than you are now. Yeah, there you go, Jennifer. Great job on Alex, right? And Alex said, yep, I started with the Fibonacci. Oops, that moved on me a little bit. Where is it? All right, with the Fibonacci class and have been absorbed into the Wealth Builders HQ bubble. Lots of great programs. There you go, Alex. Good. Jennifer said, I love that Alex has lots of questions. Me too. Helps me learn, and others too, I hope. Yes, and that's the whole idea, and that's why we did the Fibonacci Trading Live, Fibonacci Trading Mastery Live. Was, well, let me go and get my camera on. I mean, I'm sitting here. I got the ability to put it on. Why not? There we go. So that's why we did Fibonacci Trading Mastery Live, was because you could ask questions. And as you ask a question there, someone else might go, wow, I didn't even think of that. And it just helps everybody along the way. And it just triggers other questions for people to think, well, what about this then? And what about that? Yep. Congrats to all. Patty said that's great. Hey, Brenda. Great job, everyone. Yeah, there you go. Right. So let's go look at, I've got a couple here. If you have any other trades, drop them in. Actually, I only have one. So all I did today was one. It wasn't a great trade. It was an okay trade. And it wasn't a great trade because I didn't take much of it. So it wasn't great. Right. So here we look at Costco, gapped up and pulled back. I want to see what that pullback looks like in relationship to our 5-minute chart. So we got a quick gap up. It pulled back right in here, 10 o'clock candle. We go back and break it down into a 1-minute candle. We pulled back, we stretched all the way to the fib line. We had gapped up and then stretched back. And on the pullback and a bounce, I went ahead in there, only did one contract. It was, I wanted it a little bit closer, so I was just going to go and take the trade, so because I didn't want to miss out on it. And if it came back and pulled further back and bounced, I would add to the position. Never happened, so it was only one contract. But we got support here at 1,046. I think we're in at 1,049, something like that is where we were in that trade. And right now we're sitting at 1,053. So we got about a $4 move on the position overall. So not too shabby. Nothing else worked out. We had Avago. I like the setup. We gapped up, broke the 229.62, but how did we do the pullback on it? We really didn't. We ran up, we closed down here. We ran up, and then we just ran. So, okay, let's break that down into 1 minute. We pushed above, we closed back below, we broke above, and we never really got a retest, right? And then it was the, should I take it? Should I, small position? No, don't, pass. And we got a nice move up to 234, close to 235 right in here over this high. So can't get them all, and I don't expect to. Bottom line, if I could find 1 or 2 trades in a day, 2 or 3 times a week, I'm tickle pink. I don't do much in the afternoons any longer. Just don't have the time, nor do I like the way the markets look many days in the afternoon. So I do most of my trading in the morning. If I don't get in that trade by 10, 10:30-ish, maybe 11, it's a good time to just walk away, right? And then just call it a day. Go find something else to do. Not sure about you, the rest of you. I know for myself, I'm pretty busy, so I can always find something to do at that point, right? And if I don't know what to do, I'll ask my wife and she will tell me what to do. That is not a problem at all. So, all right, overall, very happy with the numbers today. So let's go and open up our presentation again. So let's go into economic reports, right? Again, we got very strict on following a, I think I clicked on something. On following a, schedule inside of here. So here we are at economic reports. Let me grab a pen. I already opened them up. Let's use blue since we got that. So nothing today at all. Day after Super Bowl, no one wants to really think about any economic reports, right? What a horrible Super Bowl, in my opinion. I'm sure, I bet, anybody like the Eagles thought it was great, right? And I did want the Eagles to win. I just did not think it was very exciting. So Fed Chair Powell testifies mañana. It is red. That's a big report. And it is 10 o'clock. I said this last week. You will see lighter volume in the morning before the announcement or him testifying. It'll start to get choppy throughout his testifying, testifying, and then look for a break one way or another, or boredom and flat, depending on what he says. On Wednesday, we've got CPI. All of this is CPI, month over month, year over year, core CPI, non-core CPI, CPI squared, and to the 8th power, and whatever, right? It's all of that is CPI. 10 o'clock again, ding, 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 winner, winner. Fed Chair Powell testifies again. Crude oil inventory, I'm not too concerned with it, unless you're doing an oil trade. And then on Thursday, we've got PPI, Producer Price Index, right? Core and non-core, just overall, not just the core, but all Producer Price Index. Unemployment claims, all of these are at 8:30, right? So we got some activity pre-market, and then Friday, the same thing. Retail sales, core retail sales, same dang report, 8:30 in the morning. So we got a couple of reports, but nothing crazy except for the fact of Powell on Tuesday and Wednesday. So keep your eye open for him to see what he has to say. And it'll be interesting. And I think you're going to hear some things around it, especially with some stuff that happened today with Trump telling a department to work from home, and that department reports to the Federal Reserve. So can he do that? Can he not do that? My guess is you'll see some of those types of questions hit Powell tomorrow, right? And then, depending on his answers, could drive markets one direction or another. So, and when I say, well, yeah, tomorrow, it could be again on Wednesday, we'll get those questions, but I think for sure you'll hear them tomorrow. All right. Market review. Let's go look at the market and see what's happening out there. right? So we're going to go back to a daily chart first. I'm going to go to the S&P 500. There's a very loud truck outside of my window. Oh, they're giving us heating oil today. So when I first started trading, my office was in the basement, literally right down below where this office is right now. This room at that point was our bedroom. My wife and I, this was our bedroom at that point before we blew the house up and expanded it. In the basement, the room that I had down there was only one window, and it's below grade, so you got a little metal frame that it kind of opens up into a very little bit of light comes in the top 2 inches or so, and it's in a breezeway, which is right here. So there's no sun because right next to it is the garage. The day they would be delivering oil today, done, I'd have to come upstairs because the smell of the oil would be too brutal to sit down there. Couldn't do it. Now they've since deodorized it and done some different things to heating oil, but it was bad back in 1997, 1999 in there. Terrible, terrible, terrible. So big upgrade for me being up here compared to down in the basement. All right, so S&P 500, guys, we need to back up a step and look at what's happened here. So we put in what was an all-time high, gap down, and we put in a new low, excuse me, new low, right? We had a lower high and now a lower low, right? We put in yet again another lower high, and what we're looking for is, are we going to wind up with another lower low, or are we going to break out of that high? We've been all over the place today. We've been, we opened up right near that 8 moving average, not far from it, right? We ran up, we broke through the fib line. This red fib line right in here, we broke through there, we came back down. We're still in a bullish bias at this point, legitimately, not even theoretically. Actually, we're still in a bullish bias, but not a favored one by me. And what I mean by that is I got this fib line right above me. I got this swing lower high, this lower high, back up. I have this high, this lower high, and this lower high all sitting right there. There's a lot to break through along with the 6116 level. There's a lot happening right now in those areas. So what am I looking for? Well, before I answer that, let's go back and look at a little bit of a bigger picture. Let's go look at a weekly chart. All right. Recently drew a new fib on the weekly. It's a great move in here. You know, we've overall, all the way back from the week ending August 9th of 2024, we've had this amazing run up. A little bit of a pullback and a bounce, and we're playing around on that 6,100 level over and over and over and over and over again, okay? Well, we step it out and go look at a monthly chart, and it's no different, right? So I got to ask, shouldn't you redraw the fibs on the monthly? I should, but where? I've got a V bottom right here. That's not a problem. I got the bottom. I got nothing as far as top. We haven't topped out. So although we keep bumping our head on ugly and running up into, you know, resistance levels on every single one of our charts, you know, every fib time frame, I'm running up into resistance here. This is part of my ABC, right? That's a 100% extension, which basically means whatever the distance was from where the fib started to where it ended, that's that 100 level is the same distance, whatever that is. If this was 100 points, just to make it up, okay? Whatever that is, it's the same thing from the lowest low we put in here up to this green line. That's the same distance. It's a stacking method, right? Something, again, we teach in Fibonacci Trading Mastery. And we're bumping our head on there now. 1, 2, 3. And notice this is a monthly chart. See down here it says monthly? See right here it says monthly? This is a monthly chart. 3 months in a row, we're banging our head on that level we can't get through. So does that mean to abandon the bullish market and run the other way? We're going to fall down sooner or later? We might, but there's no clear signal here that says, time to go, get out, baby, go do something else. There's nothing here that tells me that at all. Nothing. Just shut my volume down on my phone. Nothing at all that tells me that, right? So now we look at the weekly, we see the weekly is strong. We look at the monthly, we see the monthly is strong. Larger time frame. Why do we go to a larger time frame? If you are focused, and I mean hyper focused only on the daily chart, and you sit there like this, staring at this damn thing all day long, and it's the only time frame you look at, and be honest, for most of us, we look where? today. What's happening right now, far right side of the chart. Look left becomes non-existent, not happening. It's not the norm for people to do that, right? If you can expand out and go to a larger, at least one larger time frame than you're looking at now, it helps add some perspective. Oh, but Rob, look, I mean, when you look at this daily chart, we're doing this. Okay. Yeah. So we are in a short-term bearish trending down pattern. Yes, without a doubt. Without a doubt. But when you go back and look at the weekly and monthly, you're like, okay, there's nothing about those charts that tell me, oh my God, the world's coming to an end. Actually, if you think about it, just this date right here, right? This was the 24th. So if we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days ago, 12, okay? 12 days ago, we hit an all-time high. And there are people that are freaking out over the market right now. Now, I understand if you have no open positions at all, you bought a stock and you bought it up here and you watched it crash down, it came up and you thought you'd get back to break even, it crashed down even further, it ran up, it couldn't even get to that high and it failed again. I understand that that could put you in a, from a mental perspective, it could put you in a bad position, right? It could get you thinking about things that maybe will do nothing more than mess with you mentally, right? Maybe things that you shouldn't be thinking about, but hey, we got to do it, right? We got to focus on it. We got to think. And I'm not telling you it's easy to forget about that. I look at P&L every single day. I know exactly what I paid for a position. I know exactly where I'm at on my long-term portfolio. I know exactly what it is. When NVIDIA took that big hit, the last thing I did was tell my wife. Not at all. She's inside. Not at all. Not at all, right? Because that's the mindset is very much one of, for her, is very much one of, wait, you should have sold it yesterday. If I only knew. If I only knew. It doesn't work that way. I wish it did. I wish it did. And if I was good enough to do that, my guess is the SEC would be looking at me for insider trading if I was getting in, having great runs and getting out right before it crashed, right? Like I knew somebody that told me something. All right, we look at VIX for a second. We're still in a low VIX. We're at 16 and jingle. There's nothing. We are very, very low as far as I'm concerned. Nothing I'm worried about at all in the market. Alex said 3 bullish weeks with a bearish Friday. Yeah, there you go. Right? So this was Friday right here. This was Friday right here. And this is Friday right here. And I remember this. I remember doing the Traders Market Intelligence Report, which is the Sunday newsletter that we send out. And if you remember, that report is published on Friday evening. You go there after 6 p.m., almost always it's going to be up there, unless something happened that I couldn't record it on time and my team has to do it over the weekend. But almost always that's up there on a Friday night. So before you even get the email, you can go back to the exact same link because it never changes. We just changed out the video and you go check it out right there. Right? So I remember on this night saying, you know what, after the run we've had in the last week and a half, I am not worried about that pullback at all. And then Monday came with that big gap to the downside. And it's just a vicious cycle. The bottom line is we need to take out this swing high, right? And if we take out this swing low, that adds another level of concern for me of that bearish downtrend becomes a much stronger pattern at this point. Right now, we've only taken out one swing low. We put in a second swing low, but we haven't taken it out. Take out 1 penny below this, you've taken out that swing low, and you chipped away at the ice, and you basically the bears went like this. Go ahead. I started it for you. I broke away. You can break through the rest of the way anytime you choose, right? But if I get down near it and I bounce and I can't get through that level, even 1 penny, it held. The Bulls were in charge. They fought. Good defense. They won. Less chance that the Bears are going to break it. Brenda said, where does the fib start on the SPX? Let me back that up for you, Brenda. So it starts on 9/6, so September 6th of 24, and it ends on October 17th. And we've had a great fib in there. Now, could I change it and put it on here? You could have, but I didn't really have any need for that hiccup. We still haven't broken through the negative 618. That's one of the reasons for redrawing fibs. Hey, Jim. Jim said on my daily SPX chart, can you draw a line from the tops of the highs, then duplicate it and take it down to the lows? I'm wondering how much down channel pattern we have. Okay, I know exactly what you're talking about, Jim. Yes. Brenda, you're welcome. So what Jim is referencing is this. Can we draw off of this high, come down off of the tops? And the best I can do, I'm not going to hit this one completely, but it's okay. It doesn't have that exact. And then duplicate the line. And now draw this down here. And how much do we have? And we really don't. We really don't. Now, what if, Jim, we come here? Still nothing, right? So now this is not a legitimate method of drawing, but let's try something. I got nothing. No matter what way I do it, I don't. So you always want to draw at the top. You always want to go ahead and try to apply it to multiple lines. Well, actually, let's do it here. What if we did, nope, doing that doesn't help me any. I need it deeper. So even this doesn't work. If it was deeper down here, and I duplicate it closer, but I'm still not anywhere near it. All right, so I don't have a great channel in there or trend in there, Jim, but I do have lower highs and lower lows. The problem is, I think part of it is this low in here, this high in here, rather, this lower high here, was pretty close to what we had. And this one down here was a very steep stretch. Now, Jim, if I wanted to say, no, I need to put a line on there, how do I do that? Then this is the only way you would do it. You'd get as many points as possible, swing out to the right, come down until you hit it. I'm going to go to this one here. This one broke through a little bit. I'm going to come off of the first level in there, and that's where I'm going to draw my line off of, Jim, is right there. Because I hit this wick by coming off of here. If I didn't do it from there and just went down and did it from this low here, I didn't hit this. So it doesn't have the same level of importance without it hitting. Okay? So that's, from a standpoint of where I would do it, Jim, that's where it would be. Yeah, Jim said, thank you. I was wondering, my eyes caught that today. And you know, the funny thing is, Jim, I haven't put the lines on there. And the reason is my eyes, and I'm not even thinking it, because I've seen it. And the first thing I think of every time I see a trend like that, lower highs, lower lows, is draw the lines. And I haven't done it because I knew the alignment wasn't there. I just visually, I knew it wasn't going to set up properly. Okay. So not defending it or anything, just is. Put it in a line chart and see what happens. Well, I give up the lower lows by doing that, Jennifer. I can put it into a line chart, but I got nothing now. Everything I've had has completely disappeared. So for me, so all of you understand, for me, for Rob, I've almost completely gone away from line charts no matter what I do. And when I first started trading, one of the coaches that I had met while I was there, the gentleman that was my mentor, really, we talked about various ways of drawing your lines and what you do and so forth. And the gentleman I'm talking about is Vaskin, my personal mentor. He was my coach. And we talked about drawing those lines and using line charts versus candle charts. And Vaskin said, Rob, you can use a line chart right now, and the way you were taught to draw lines, the way, because he learned it that way in class, although he already knew how. Again, for those that don't know the story, remember, Vaskin was only at that training to learn options. He knew how to trade. He had millions in the stock market as it was. Tens of millions in the market, right? Very wealthy individual. He came to learn options. He was looking for more leverage. He said, you're going to get to a point where you're going to look at a chart and you're going to be able to tell without having to go to a line chart, good, bad, or indifferent, and how you want to draw things from there. And he was so right. So much to the point that in the Fib Trading Mastery series, I went ahead and put a section there called charting the art, the science versus the art, right? And when you learn how to chart, technical analysis, when you learn that, technical analysis is a science. No ifs, no ands, no buts. It's a science. Here's the rule. Then you learn it, and now it becomes an art. Can I finesse, tweak just a little bit that one piece? Can I do that, right? That is where the bottom line for me is that piece, that finesse. And that finesse is what I could do without having to look at a line chart and say, I don't need that to be able to draw off of. But if we go back to it just one more time to visualize it, these swing lows gone, these swing highs gone. It looks like this ugly moving pattern, right? Here, I know the bears were in control on that open. They stretched down and the bulls took it back. The bears were in control on that open, right? And all the way down there, and then we stretched and took it back, right? The bulls took it back, right? From them. When I say we, I'm more of a bull, right? In there. All right, make sure I didn't miss anything. Let's see. What about a wedge? Bottom, lower, two candles, bodies would be horizontal. Then the top would be at a right angle, possible wedge forming. But if you're going to use these bodies, then you should use these bodies, right? So I guess I don't, Jim, I don't cross them or commingle them, maybe, or I got it, manipulate them to suit what I want it to be. Might there be some validity there? Maybe. I don't use them where I separate them that way. And I tend to use multiple points, meaning I want to see how many times it hit off of a point rather than trying to align it to something I see. What I don't want to do is force my opinion to go, all right, see, I was right. No, I don't want to be right. I just want to be, right? I want to make the analysis, and whatever comes of it, comes of it. Whether it's good, it's bad, it's ugly, whatever it is, it is. Alex said, I highly recommend Rob's new Fibonacci class. That with monster market movers is a killer combo. Put in the work and you're probably going up. Okay. Well, I appreciate that, Alex. All right. Perfect. So guys, I gotta say, I'm not bothered by the pattern we're seeing in the S&P 500 right now yet. Come down and bring me back near that recent swing low, and now I get 3 lower lows, then I got more problems. So really no pattern setting up, just a choppy market. No pattern per se, Jim, where you can draw lines and look for where it goes to. And again, if you wanted to, you would draw off of these wicks right here, first and third wick is where I would draw off of. I would duplicate it. And you need to be touching on both lines. So if I come down here to this wick, I'm not here. So that doesn't help me any. So I'd go up to this one here. And now I've got a pattern in there that all that happened, Jim, was we broke through it a little bit further on this one. That's all it is. If you're looking for a way to draw it, that's exactly what I would draw on there right now. Just literally the exact same way. First candle high, third candle high. So the third one, that's the lower high. And then from duplicated parallel line from the lowest low on the first drop, that first low is where I would put it from. All right, does that help, Jim? Now, by the way, that conversation that Jim and I just had going back and forth in text, that's what you all need to start thinking of or thinking about. How do I step back, position one in the chair and go, ooh, what about this? And start analyzing, or even better, ask it here. Ask it here. Very helpful. Thank you much. You're quite welcome, Jim. Trip goes, and of course, check out the midpoint of that channel. So I'm going to do it visually. I'm going to change this around a little bit. Make it a dash dot just so it kind of stands out. right? And where are we? Look at all of the play right in here. All right, big plus, right? Appreciate that, Trip. Thank you for that. All right. Bueno, let's go ahead and go back into the presentation. Oh, okay. So we've got Inner Circle coming up tonight. Inner Circle members, I want to apologize that we put the check-in and the monthly event back to back. I just grabbed my assistant and said we don't want to ever do that on a Monday again. So apologize for the 3-hour long evening tonight, but we'll be doing it this evening. Brandon's teaching his follow-ups. So those that are here, make sure that y'all bring your questions tonight for him. Mastermind group is tomorrow. Monster Market Movers is coming up on February 19th. Right, Feb 20th is Trading You. We have no, all right, so we need to change this. So Andrew, make sure we adjust this the next time. There is no power hour on the 17th, but we already have it rescheduled for the 18th. So there is a power hour next week. It's just on Tuesday. 17th is a holiday. I think it's President's Day. Training Coaches Playbook coming up. And then ding, 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 we got 4 cash flow dominance trainings on the books. Feb 20, 25, 6, and 7 at noon and 8 p.m. Right? Power option plays, cover call, explore, E-mini are all on the regular schedule this week. Again, next week on the 17th, there is no E-mini, right? We don't reschedule that. We just, for that, let's see. Yep, market is closed on the 17th. Correct, Brenda. Yep. And here, always, every one of you should be doing this, right? NYSE, NYSE, stock market, holidays. Holiday at NYSE, New York Stock Exchange, right? NYSE. Feb 17. Make sure you get the right year, guys. I made that mistake before. Good Friday's coming up next in April, and then we got one in May, and then we got Juneteenth. We got July. I think the government's goal was to get like every month. January, February. Oh man, we don't have a March. April, May, June, July. But there's all our holidays. And you got to be careful. You got to be careful. You see the multiple stars or the stars? One star, each market will close early, 1 p.m. 1:15 for eligible options on Thursday, July 3rd. So make sure you look into those. Make sure you look into those. All right. But that's where you're going to find it is right there. Right. There's other sites that have it. I would be very careful grabbing those. All right. Monster Market Movers, folks. Here's the thing. Let me see if I can grab something. Let me see if I can grab something. Monster Market Movers right now. There, I am very much an organizer when it comes to levels of where we keep things and the likes. This is just an older training out of Monster Market Movers. Right? And these are, again, old candidates in here, right? This is back from October of last year, all right? So these are all long gone. But these are stocks that were in channeling patterns. These are all stocks that have Fibonacci patterns. These were stocks that were near 100, either bullish or bearish, moving up or down. And these were thrusting patterns, which are the start of our Fibonacci pattern. When I see a large directional move, I put a check mark on that one. I save it to a file folder. I check it every week to see if we got a V bottom and a V top where I can draw my lines in there and then go from there. But this is all the candidates. And then the action plan is not complete. What happened to the action plan? Oh, here we go. Nope. I don't know why. Huh. What happened there? It's like I hit delete on it or something. Let me try this. Let me look at the September one. All right, here's the action plan. So golden ratio retreat, there are some stocks that are setting up for that. The zero line breakouts. We've combined these two together in one list now, inverted and zero line breakout, Fib channels, Fibonacci 4-step switchbacks, and then stocks in channels that are near support or resistance. All right. Guys, if you take these candidates, and I do a video where I actually analyze every stock for you on this list and the channels and the fibs. I don't do the bullish and bearish at 100. okay, or the thrusts. And I give you the ability to pause the video. You can go and look at that candidate, draw the fibs, because I show you exactly where they start and finish on every one of those charts. You can draw the fibs and then start the video back up and go again. All right, first month you do it, it's going to be a little bit of a bear. After that, it's a lot easier to keep up with once a month, right? And we do monster market movers once a month, but I am spoon feeding you these candidates saying these are the ones we're looking at, not just here, but here. This is everything that's setting up right now, right? Is there an opportunity to be profitable off of this, right? I don't know. Here, let me try something else. Let me do this. Let me move this. And let me see. Let's go here. Let's go to 2025. We've done one class in 2025. Let's go look at that list. I'm not going to bring it up. I'm going to go into the main candidates here. And let's do this. Watch. ADI, alphabetical order. It's the first one on our list, guys. I haven't cherry picked this. I haven't looked at this for today. Nothing. All right. Here's my fib. Here's my channel. Right. Here's my Fibonacci channel. Right. And this, for those of you that have not seen this before, you've not been in Monster Market Movers, you've not seen me teach this in Trading You. There's the channel right in there. Right. And then we stayed in there, and I have midpoints drawn in here. Right. We moved back up. We came back to the bottom. We moved to the top. We came back to the midpoint. We broke out, retested, and bounced off of the zero line. What I do is I take that level, whatever that channel was there, and I duplicate it one level up here, one more level up here. So I have two channels above, and you're going to have to trust me on it. You can't see the other one because it's a little further down, but I have two channels down below. And I've got these midpoint lines in here as well, these black lines. Right? Now that you understand or see, you may not fully understand what I'm doing yet, but you see what I'm talking about there, what I'm referencing. Let me take this down. Oh, you know what? Let me get rid of my crosshair. It just makes life easier. Watch. So we moved up, we retested, we bounced, we got an opportunity. This is going to be a target. This is a target. This is a target. They're all targets, right? Every line is a target, okay? On this level here, we failed. We're going to set a target up here for half of the trade. It bounced. So we got half of the trade was profitable. We got taken out of the second half of the trade there, right? May or may not have taken that one. I don't know, right? Up in here, definitely bearishness there. You take the trade there. Target 1 is hit. Target 2 is hit. Life is good, baby. I moved from 241 down to 221, 222. So 18, 20 points to the downside. Really nice. Okay. And I want you, I'm not even going to go through whether we found the trade or not in there. I want you to look at the way that I've done this. Let's just start here. We went right to a line. Well, Rob, it broke through there. Yeah, but it lived on that line, right? 3 days right there, back here for 5 days. I don't really count this, right? But look at here. Beautiful. Right here and here. A couple of days in there. One in there. A couple there. Right there. One for sure. Back here. Look at how much it respects these lines. Yeah, but Rob, so it's in like its own little channel in the channel. Exactamundo. Right? We broke out and we went right here and stopped. And we got down. It didn't go any further. So that one didn't work. Okay, so what? No trade taken there. It stopped right there. Stopped here. Right there. Right there. Yep. Yep. And yep. Okay. This is over and over and over and over and over and over and over again. Now, the reason that I am bringing this up is Monster Market Move is $199 a month. Right? If you're not an active member in Monster Market Moves, I don't care if you've had in the past. If you're in there last month, the month before, within the last 3 or 4 months, it's just going to automatically charge you the $199. So don't do that. But if you haven't been and you want to come in for $29, he already dropped it in. Look at that. Andrew dropped the link in there already. Right? It's $29. It's February 16th, so next week. It's $29. You get over 2 hours of pre-training prerequisite material. The training is 2 hours. There's a 20-minute candidate video inside of there. Tons of material, an action plan of what to be looking at for the next week, and the likes, guys. Well worth it. Well worth it. This is the training. I've gotten it down now. I can't do any less than this. meaning time-wise for me. It takes me about 16 hours of prep to do this class. Normally I do it on a Wednesday or a Thursday. I start on Friday or Saturday looking for candidates. Right? And then the analysis right up to 4 p.m. to 6 p.m. the day of the training. Let's see. Alex said last week I was up $2,500 paper trading monster market movers candidates. I'm a novice trader, and this was my best swing trading week yet. Love it. Excellent. Good. Great thing about monster market movers, it's such a big list of candidates that there are nearly always something on the menu, setting up or ready to trade. That's exactly it. Right. And we look at these over and over again. So grab the link in the training if you're in the chat box if you're interested. Right. Weekly training topic. Tariff or no tariff? That is the question. Guys, listen, I don't pretend to be inside of Trump's head that I know what he's thinking and what his plan is and so forth. But going on what I listen to, oh, thank you for that, Andrew. Yep, you need the coupon presidents. Right? You need the coupon presidents. Andrew just dropped that in. Right? So that's important. So going off of what I hear the president say, going off of what others that are around him regularly are saying about the tariffs, does he want the tariffs or not? We hear that the tariffs are just a way to get Mexico and Canada to comply, and China, to comply with getting the fentanyl stopped coming across our borders and getting immigration under control. And although I think that may be a starting point, I don't think that that's the whole truth. I think there's more to it. I truly do. Right? I do think there's more to it. Now, if something came out today, I guess, from the Super Bowl when Trump was on his plane yesterday, where somebody had asked something and he made a comment of, it doesn't look like we're in as much debt as we thought. Right. And yes, they are trying to figure out ways to cut things down. And I get the people are bothered that, they stopped this from $50,000 going here, 100,000 there, $1 million there. I watched a senator, I think it was a senator, House or Senate, I don't remember. But I think it was a senator, say, oh, but that's only 1% of the taxes we collect. Yeah, but that's what we're giving away. What if you took that 1% and used it here for veterans or something else, right? So I think his bigger goal with tariffs is our audience, right? If someone comes to wealth builders and says, hey, I'd like to market to your students, my first question is going to be, great, what are you going to pay me? What do I get? What have you done for me lately? Right? This audience, I have built it. It's mine. Spent a lot of time, money, effort, nurturing, and everything else, doing power hours and the likes. It should not be any different in the US. You want to sell to people in the US, what are we getting for it? That's a tariff. That's a tariff. And they have been used for many purposes over the years. I was in the steel industry when I was in manufacturing. And Russia was one of the countries that was dumping steel. They were putting it in our market for less than it cost them to make it. They had so much of it, they had to get rid of it. Right? So what did the government do? I don't remember who the president was at that time. Maybe someone can figure that out. It was in like 83 or 2 or something like that, 4. Whoever it was, they put tariffs on steel, massive tariffs on Russian steel. Woo! Just jacked it up, man, big time pricing, right? It didn't stop them from dumping. They still continued to dump. Right? And it's no different with other products that get dumped in this country. And there are certain things that can and cannot be sold here and are anyway. I will give you an example right now. There's a lot of but regulations against Russian products. There is a plywood, which I'm a big fan of this plywood. It's called Baltic birch. 95% of the world's supply comes out of Russia, right? It's the best, cleanest, sweetest edge plywood you've ever seen. It is just amazing. The other 5%, I think, comes out of Asia. Well, now Russia is no longer allowed to sell it to the US and so forth. But ironically, the same amount we bought, or a little bit less, I guess, but much more than China's capable of producing, they're selling more than that to the US already. How does that work? How can they sell more than the max they're able to produce every year? Well, they're buying it from Russia, selling it here, right? And prices more than doubled, probably tripled from where it was. That's how expensive it is to get your hands on this material now. There you go. Tripp said it was Reagan that was in there. Not surprised, right? Tariffs go back way back when, but pre-IRS, tariffs were the way that taxes were paid. IRS was supposed to be short term. Let's just get a little bit of extra income in there so we could clean this part up here, whatever that part was. And it's just gotten worse. And it was just going to be on the wealthy, and then it hit everybody. And these wealth taxes of just go after the wealthy, they need to pay their fair share. Go and do the calculations on what they actually pay. But remember something. Those wealth taxes start off where it's, you had to earn $4 million a year or more to be tariffed or taxed, right? Oh, that was great. I don't have to worry anything about that. But next year it's $2 million. The year after it's $800,000. The year after it's $125,000. You're going, wait, how did I get my taxes go up here? It's only supposed to be for the wealthy. The government's going to take that inch, and they're not going to let you know they're doing it, right? What does that do to us as far as pricing goes? You are going to see costs go up. There's no ifs, ands, or buts. If tariffs hit, you're going to see it because, and countries are talking about retaliating. And that's great. Canada has already said it. 25% tariff if you hit us with it. Economists have already estimated that if Canada does that, and I'm not the economist guy, so I can't say yay or nay. I'm just telling you what I've heard. If Canada does do that, does put a 25% tariff on the U.S. on whiskey and lumber. Trump said we don't need their whiskey or their lumber. We probably can get away without their whiskey. I think we do have a need for their lumber, though, right? They're a big lumber producer, right? So is it going to hurt more? Yeah, I remember when we did the construction on this home right here that I'm sitting in, when I was the general contractor for it, we were buying 2x4s for under $3 a piece. I was in Home Depot this weekend. The same one we bought, which was a Douglas fir, top of the line, was almost $9 for the exact same 2x4. Now, we did this work in 06, 07. Yeah, 06, 07. I think 06 we did the boiler, and 07 we did this for. But whatever it was, less than 20 years ago, and we're triple the price, right? So now Canada goes ahead and institutes their tariff, 25% against the U.S. Trump's already said that he will, if a retaliatory tariff comes in place, you will go to 50%, not 25%. And the expectation is Canada will go bankrupt at 50%. Now, will the Canadian government stop supplying electricity to New York? I don't know. Maybe. I can't say. But I think there's a lot of posturing going on right now over, we're not going to do this. I'll show you. We'll stop selling to your country. Okay. You mean the 77% of the exports that come out of Canada that come here? No, I don't want to see that happen. I don't want to see that happen. But should other countries pay their fair share to market their goods, their wares in the U.S.? Probably, right? Will we continue to have an IRS? I hope not. I'd love to see an ERS, an external revenue service, not an internal, an external. And the external would be tariff, right? Look, guys, let me ask you. Give me a 1 for yes. Don't give me any twos. Just a 1 for yes. Have any of you ever bought from Baidu, Temu, any of these Good Bang, any of these overseas companies from China, right? Patty was the first one to type in a 1. Patty, how was the shipping cost on there? To ship it from China to the U.S., right? Or Alex or anybody else that put a 1 in there. How was the shipping cost in there? Was it expensive to ship? I mean, that's a long way. I know if I send a 5-pound package to Florida, I'm paying $20 to ship it there. I get a 40-pound package and I buy stuff from Banggood. Banggood? Yeah, Banggood. They have a lot of woodworking tools that I know a guy on YouTube that he reviews them and is a good woodworker. So when he says these are good, I jump all over it, right? If it's a tool that I need. And I paid $1.50 to ship it, or free shipping coming across, right? Those are special conditions given for the U.S. to China. Why? Why would that be a lower shipping cost? To me, it's going to hurt us in the long run that buy it from a local supplier instead of going over to buy it from China. Okay? And yes, a lot of what you see, if you go and look on Amazon and you find a product that you like, you can go find it in one of those shops in China. You can order it in, and if you're smart, you see that they sell $2,000 a month. You go and get it from China. You put it in, it's 50 cents lower. You use some of their same keywords. You get some of that same traffic. You sponsor it a little bit, and before you know it, you're selling, 500 of them a month, making $2 a piece or something like that, whatever it is. Okay. So is there value in buying it there? Yes. Is there value in tariffs? There is, if we can get rid of our taxes or reduce what we pay in taxes. I don't know if we'll get rid of them. I just don't. I think that's control the government won't give up, because if something happens where we cannot collect the tariffs, they know they can collect the taxes on us, and they know they can raise the taxes on us. So I don't think they're going to get rid of it. But will there be an external revenue service, an ERS, a tariff division? I think there will be. I think there will be. But you are going to see prices go up because of it. No question at all. But the other side of it is, what is Trump trying to do with the tariffs? If you are a manufacturer and you make your products in other countries, if you build a plant in the US, he said, and I quote, you will enjoy the lowest possible tax bracket of all other businesses because you built it here. Two Canadian companies, food companies, were getting ready to expand, decided to both do their expansion. They're fast-growing companies. Both of them are doing their expansion by building their factories in the US. If we're 77% of their exports, why not build it here, make it here, and get a better tax break for it, right? And make the people you're selling it to happy, meaning the government, happy with it, right? So we are going to see some potential short-term gains. You can't look at it and say gas is going up today, and that's because of Trump. How? What could he have possibly done to make gas go up yet? Right? Can't. Right? He just made a deal with Saudi Arabia where they're going to put billions and billions of dollars they're going to invest in the U.S. I don't see it. I don't see it. But you do have to be on the know here of the tariffs. Now, with that being said, and I'll leave it at this, if you see that there's a product coming in from a certain country that is going to be highly tariffed, stay away from that product as far as the stock market goes. Or if it is affecting the price of the stock, so if for some reason Eli Lilly, I don't know if this is true or not, I'm making it up, but Eli Lilly, all of their drugs are made in China. They're not, but pretend. Okay, all their drugs are made in China. Trump puts a tariff on China, and they jack up and they put tariffs back on us on 50% on all medications, which they very well could do. Right? Well, then you're going to see that go through the roof, right? Eli Lilly's prices are going to go up. Their profit margin is going to go down. So what happens? Stay away from that as an investment and buy puts. Learn to read the market and determine how to trade it. And that was the whole reason for this question, tariff or no tariff. That is the question. I want you to be able to look at the market and say, okay, this is happening. What's my pivot? What do I do next? How do I get away from this, get around it, right? So I don't get crushed. How do I capitalize on it and take advantage of it? Things aren't today like they were when I first started trading. Literally, we had a plane crash, 97, 98, whatever it was. Plane crash down, probably it was one of the two, I don't remember. Plane crash down. Hours later, the price of that stock had not moved. No one was thinking about that. The speaker in front of the room of the class I was in at that time was like, buy puts. Why? Because it's going to go down. Why? Because people are going to realize, oh my God, someone just died. And guy sitting not far from me said, but I don't want to make money off somebody else's misery. And this is where I got it from. My coach leans over to me and he yells it out loud, but my coach leans over and whispers it to me, and then he says it. He goes, go ahead and make the money and give it to the people that suffer. If you don't want it or need it or want to make the money from it, make the money anyway and give it away to whatever the organization, the group of people that suffered, so they at least got something good from it, right? Yeah, Brenda, I don't, and listen, I never understand why we expect any kind of medicine from another country. There's so much. What would happen if semiconductors stopped coming this way? If chips. I mean, Taiwan, and what was the deal today? Trump's talking about raising 100% tariff on chips coming out of Taiwan. What does that do to your car, to your sports watch, to your phone, to your computer, to every single thing that you have? This little clock, everything that you have, the mouse on my desk, the desktop phone, the digital picture frame, they all have chips in them. Excuse me. They all have chips in them, right? You're gonna have a problem with it. So we need to get some of the building back here. The problem is this is not a 4-year fix at all. It takes a long time to build plants and train workforces and so forth, right? All right. Your stock review. What candidates do you want me to take a look at? We've got 5 minutes left. So let's see. Jim said, LOL, by the way, I love the title about tariffs. Yeah, there you go. Right. That was pretty cool, right? Uh, all right. So let's see. Brenda's asking for, let's see, did this? Okay, good. Um, you know what? Let me put up my symbol grid. Nope, wrong thing. Put up my symbol grid. I'm going to go and grab all symbols. Right. And we got GLD. Gold in them dollar hills. Let's go back over to template number one. Gold has been absolutely insane. Not 1, 2, sorry. Gold's been absolutely insane. Right? Without a doubt. It has. I need a new fib. Yeah, we're gonna come from in here, right? Up to here. Okay. So 258 to 268 is 10 points. I've got 5. Yeah, I need to split this in half. So I need a negative 136 and a 118. Okay. So yeah, it's at its all-time high GOD, right? Which is gold spiders. So break out above the 268 level, retest and bounce. 272 is resistance. If it fails, it's a great switchback if we close here. If it fails, looking at 263 as support. So a lot of opportunity on this one, Brenda. SPY. All right. So SPY, same type of thing. Lower highs, lower lows, setting up in there, right? Good bounce today, better than what we saw in the SPX when we looked at that earlier. Good little bounce. So from here, I'm looking at 609. If we fail, we're looking at 600 to the downside. I don't have a lot of room to the downside, but it's a strong level. It's a 100-point level. It's the 21 moving average. It's a blue zone with the 598.68. So there's a lot happening in there. Here's the blue zone. Ah, perfect. Good. Set that. All right. So I hope that helped, Brenda. Netflix is next, and that was Roman. Hey, Roman, how you doing? Nothing, Roman. It's in the middle of nowhere. Let's see. Do I need a Fibit in there? 52, 93, 47, and 7 is 54. I actually do. I actually do. So we're going to put a -5 in there. It's the next standard level. Ah, that's even a better picture then, isn't it, Roman? So retest the 1020 and 1047 is resistance. If it fails, you're looking at 1,000 to the downside. Although my strength is to the upside. I like it. Good opportunity, Roman. Alex is asking for FedEx. All right, so we've already closed through the 882. Just Uglyville right here. Can I get a new fib? Right in there. Let's see. So do I need Fibbits? 53 to 65 is 22. Oh, yeah, I need to split them. 65, 75 is 10. All right. All right. 53, 65 is 12. Right? No, we got 12. That's what we have right there is 12. 1279. No, we're okay. We're okay. So I don't like the upside at all because of that moving average in there. But if we break the 253, retest and fail, 248.5 is support. Right? So I hope that helps, Alex. Brenda's asking for Amazon. Oy, I like the downside better. Give me down to 224. I got a 9-point move, 11 point, 9 point move to the downside. To the upside, I got the 8 moving average right in the middle there. Be cautious with that one. That's on Amazon, but back up near all-time highs again, guys. So I'm not really complaining. QQQ. Come on. There we go. Okay. So we had the same candle on Thursday. Friday, we gave a lot back. We're back to literally, with the exception of the longer wick, it's the same body that we've had. Close here, move up, retest, bounce. It's 11 points. I don't need to fib it in there. So looking at 539 on the upside. There's some opportunity, that's for sure. Last one is Nike. Okay. Ugly. Let's see. 64 to 71. That's 7 points. I need to split that level in half. So let's put in a negative 136. Okay. So retest the 71 and fail. We're in a true bearish bias. Retest the 71.25 and fail. We're already in a true bearish bias, and we're looking from 71.25 down to 67.5 as support, 67.75. So 68.25 would be my target on the downside. So, all right, everybody. Andres, you're welcome. Ed, great to have you here. Thank you again, everybody. Alex, welcome, welcome, welcome. Hey, listen, I'm going to leave the room open a couple of minutes. Go ahead and get registered for Monster Market Movers. Do not miss out on this $29 offer. It's coming up next week, is the training. And if for some reason you can't make that one, send an email to the office, ask if there's anything you can do to hold it to you for next month, and we'll gladly work with you on that if at all possible. So with that, have a great rest of your day. God bless. I will see you all on our next update. Bye for now, folks.